Mr. Sivaramakrishnan, Ganapathi, Managing Director of Gokaldas Exports. Good morning. Thank you for joining us. I just want to start with
Good morning.
something very basic here. Given that the fear of a recession in US at least has got averted, and the macro data points are pointing to a decent recovery on the GDP front, on the consumer front, on the jobs data, has that translated into better business prospects for an exporter like yours?
The prospects are certainly better. I can see that we are seeing increased traction for FY25. The early indications from the brands seem to indicate that they are a little more confident than they were in FY24 when there was an excess inventory problem as well. So most of the brands have more or less gotten rid of their excess inventory, especially the fast fashion ones, and they're coming back and buying. So I can see a fairly good trend from a demand perspective emerging in FY25. It will again keep improving as we go through the year. Initially, brands were very conscious in buying, but if you look at even January, February retail sales, it seems to indicate that there is still growth over a high in calendar 23. So the directionally the consumers are buying. So that's what exactly you're saying as well, that there is no recessionary trend yet evident, and hopefully that will pass. In which case, brands will come back and buy more. The early indications are in that direction.
Isn't it unusual that we are talking about demand revival when Christmas is over and there is no large event per se, at least for Europe and US, because those are your core markets, and typically these markets will have events, and post-event demand drops. What you're telling me is that even though Christmas is over, spring demand is over, you're still very confident. Where is the demand coming from?
So you should look at it in the context of last year. What had happened was last year retail sales, I'm talking only the US market, but this is by and large true for European market as well. If you look at the US market, the retail demand was up about 3.5 or almost 3.9%. However, the brands buying was less by almost 23%. That is because they were sitting with excess inventory from calendar 22. So with a 23% drop in demand globally from US purchases, and the same number for Europe was around 14-15%. So with that kind of a demand drop, we are now seeing that since the inventory position has been corrected, there is an increased traction for buying. So it's based on a peculiar context in calendar 23, which is why we are seeing the demand growth.
Mr. Ganapathi, but what about the crisis in Middle East? Is that sort of hampering demand supply any which way?
Yes, it is in a perspective, but it is hitting us from a logistics and delivery dates perspective. So, for instance, getting ships to load our containers is becoming a problem. Brands are asking for advanced delivery from case to case, and we are finding that difficult. Air freight costs have gone up, so most of the costs have gone to the brand. At the moment, we are not bearing any cost. Having said that, it's becoming a headache from a logistics management perspective.
Yeah, I'm sure it is. And then to add to that, you've also got the increase in the dumping of cheap polyester fabric in the Indian markets. That is a bit of a risk. Given that China has gotten rather aggressive post the Lunar New Year holidays especially, what is the outlook in terms of your spreads currently for domestic and for international markets?
So we don't cater to the domestic market at all. We are only catering to the international market. So we're not particularly worried about that. And if fabric prices come down, it's only good for us because that's a raw material for us, and we convert that into garments and sell internationally. Anyway, for polyester, we are not very dependent on Indian fabric supply. So we have not seen much of a problem, and the quality that we need, those prices have slightly come down, but all that augurs well for us.
What about your expansion plans? How is it that you grow further into the export markets? Any new geography that you may have identified for expansion?
Certainly. I mean, we are keenly watching Europe. We are hopeful that, somewhere during this calendar year, we should have the momentum on FTA negotiations pick up with UK. And if that happens, that will open up a good market for us. There is a negotiation happening for FTA with Europe. It may take a few, maybe a couple of years, but whatever time period it takes, it's a step in the right direction. And hence, we are looking at expanding into that market. We're also looking at Japan as a market, as that's opening up, and that's a large market as well. So there are opportunities there. So we are trying all options to diversify. Having said that, with 75-80% of our exports to US, we will still remain fairly US-centric.
Brokerages are of the view that in the near term, the consolidated EBITDA margin may slip as Atraco operates at a lower EBITDA margin. When can we see a reversal happen? What is the outlook in terms of your EBITDA margins due to the acquisition that you're penciling in internally?
Sure. So EBITDA margins have been impacted by two things. One is, of course, Atraco, which operates at 10.5% EBITDA margin, as against ours of 12.5%. Having said that, we were also seeing a headwind from a demand perspective in FY24, which also meant that there was a demand-supply mismatch, which really resulted in a pricing pressure. We are very price sensitive and conscious and try to hold on to a margin as much as possible. But even then, when there is a demand fall off of the order of 23%, that's almost like another COVID hit us in FY24. Even during that kind of a scenario, we've tried to hold on our margin. So I think this reversal, which you talk about, will happen in FY26. In FY25, we will definitely try to improve our margins over the previous period, even though Atraco may have a slightly dampening effect. But at a net level, Atraco will be positive because Atraco's revenues and profits are based out of Dubai, where there may be tax advantageous situation. So it's going to be from an EBITDA perspective, a little dampening effect to start with from Atraco. We will hopefully correct that in 2-year time frame. So by FY26, you should start seeing the correction.
Fair enough. So good to know a little bit more as well about the integration after the acquisition of Atraco. Down the line, what are your CapEx plans? What are your acquisition plans for FY25, if any?
So, we've had two acquisitions already, and our aim is to integrate those two acquisitions. The plans for integration, the work on integration is going on in full swing. And there's a lot of areas that we've identified where we are trying to join hands and try to take some synergy benefits. So all that is going on. I think most of this year will be consumed in that. I can't comment on any future acquisitions at the moment. We will, when those opportunities present themselves, we will take a look at it based on its individual merits.
What is happening to cotton, which is one of the most important raw material for exporter like yours? The prices have been volatile. Do you see that playing a spoil spot in FY25?
Not much. So what, we are not that dependent on cotton like a yarn supplier. By the time the cotton gets converted into a fabric, the cotton cost gets dampened because there are other costs which come into play. So if you look at somewhere in 22, when cotton prices nearly doubled, the fabric prices only went up by 10-15%. So we are not exposed to that level of volatility on account of cotton because we don't buy cotton, we buy only fabric. And what happens is when cotton prices go up in relation to other fibers, then the blends start getting popular. So there are a lot of other factors at play which we tend to use in order to lower our raw material costs. Having said that, a volatile cotton price is not great. We would like to see cotton yields go up in the country and more cotton is available. Cotton prices directionally are on an upswing, which would be negative for the sector. But I think that we are reasonably insulated. And from our own costing perspective, we factor in all the fabric prices into our costings. So it largely becomes a pass-through. So Gokaldas' margins may not be that impacted.
All right. Appreciate your time, sir. And thank you for joining us. That's the management of Gokaldas Exports.
If you like this video, then like, share and subscribe to ET Now.